Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. I mentioned last week that the ASX has been one of the beneficiaries of recent turmoil in global markets, with more investors choosing to stick with local companies. I wanted to find out a bit more what investors have been buying and selling both here and overseas. Of course, this isn't an investment podcast. You should speak to a professional before making any investment decisions. The Sharesies platform has nearly 600,000 investors across Australia and New Zealand who collectively have invested about $1.8 billion. It means the platform has a wealth of data, perfect for spotting trends. Brendan Doggett, Country Manager at Sharesies AU. Welcome to Fear and Greed.
Thanks for having me.
We're looking at data from the last month or so, middle of June to the middle of July, let's say. So we mentioned this last week. How strong was the bias towards buying local vis-a-vis what it was previously? And I suppose we're comparing to Wall Street primarily.
Yeah, so absolutely. I think as we know the markets and globally, there's a lot of stuff going on at the moment. And we see our retail buying behaviour coming home to Australia. So around 77% of the buy volume for over the last month has been really in Australian companies. And that's to do with people know the products, they know the environment. Australia's done relatively well compared to some of our global counterparts. And pretty much 8 of the top 10 companies in the top 10 buys this month have been Australian companies, with just the usual kind of Tesla and Apple being in there as well.
Yeah, okay. So Tesla and Apple are still in there, and they have been in there for quite a while. And we're talking retail investors primarily. So I should ask that first off.
Yeah, retail investors. Our platform is actually available for all, and we kind of see large trades and all, but predominantly we're kind of 25 to 40-year-olds who invest regular amounts, but smaller amounts.
Yeah, okay. So Tesla and Apple has been in there. The 8 of the other 10, are they who we'd expect them to be? The miners, the banks, the retailers?
Yeah, like commodities, financials, and consumer goods. And that's been pretty much the same the whole time that we've launched in Australia, which really shows that retail investors are continuing to invest in the way that they want, but the volumes are much more heavily skewed to Australian companies at the moment.
So why is that? Why do you think they're doing that now?
It's definitely about a sense of, the world is an uncertain place, particularly the US. I think commentators are talking about a recession in the US or not. It's mixed. There's lots of stuff going on. So people tend to then kind of come back to the companies they know. And in Australia, it's digging metal out of the ground. It's Wesfarmers, it's Woolworths, and a couple of the banks.
It's quite interesting how people were Tesla and Apple would probably be the 2 highest profile offshore companies. I have no data on that, but, anecdotally, you think Apple definitely and probably Tesla because Elon Musk is in the news so often. Do retail investors tend to follow the news cycle like that? Or do you find a lot of them searching, doing fundamental analysis, looking at macro variables, and then finding stocks that, perhaps the rest of us haven't heard of?
Yeah, all the fun stuff. It's really a mixture, but retail particularly, I think, have kind of come into their own in the last couple of years. Institutions no longer kind of just control the share price. You've seen retail shareholder activism and some of the meme stock stuff, but retail investors are much more financially savvy than I think some of the old school broking community give them credit for. There's lots of discussion. Access to information is much easier now. People are able to find the data and research the companies that they know. But then, of course, there is a lot of trading behavior which follows the news cycle, or what Elon said on Twitter, 3 days ago, and that sort of stuff.
Yeah, okay. And it's a good time, Brendan, to jump in here and say we're not an investment podcast, so please use a professional advisor. Find someone that you can talk to as opposed to dealing off the back of this particular podcast. Outside Tesla and Apple, what are they buying into? And what about outside the US? Where are they buying?
Yeah, so in the US, it is the usual things that you said, kind of like Tesla, Apple, Amazon, Microsoft, Meta, that sort of thing.
Yep.
And then on our platform, obviously, we offer access to New Zealand as well. So New Zealand, it's, Air New Zealand, some wind farm stuff and some freight companies.
Yeah. Okay, so let's bring it back. Lithium. We've heard lots about lithium recently, and the price of lithium is incredibly high. And we had Elon Musk and his chair, Robin Denholm, who is an Australian, coming out last week saying lithium is the way to go. Now, obviously, they're talking their book because they want lower cost lithium to put into batteries, to put into EVs. But I'm just interested in things like, I understand why iron ore does well, but do people follow lithium, for example, and then jump into those sorts of stocks?
Lithium is an interesting one because it's a commodity. So we have access to mines, and we've got some good lithium deposits in Australia. But it also follows the tech kind of growth companies as well, because obviously lithium is used very heavily in EV, as you mentioned, and other things. So it is seen as a bit of a play. So we kind of see the buying behavior in Tesla and other EV manufacturers and tech companies mirrored in these lithium stocks. So it's a kind of combination of tech meets digging metals out of the ground, which is quite interesting, which means that it does get traded heavily. It's not usually a buy and hold.
Yep.
People do that, but it is one where people can see some price movements, and if they like the volatility, it is something that they play in.
Stay with me, Brendan. We'll be back in a minute. My guest this morning is Brendan Doggett, Country Manager for Sharesies AU. I mean, just now, given we've got more buying within Australia and New Zealand markets rather than offshore relative to, let's say, 12 months ago, are you seeing more trading as well, or is there more buy and hold?
So what we see, our typical Sharesies investor holds probably 3 or 4 ETFs. So ETFs are super popular. They have been for a long time. In volatility, people put more money into ETFs, and it's very much a buy and hold. So ETFs are going great guns. And then there's maybe a handful of companies that people invest in. I think around June tax time, there's a bit of trimming of portfolios and tax stuff. So we do see a bit of more trading, but our investors really are investing for the long term, so 10-year plus, not changing their strategy even when the market's going up and down. But there are these stocks which are attractive to kind of have a little play around in and follow the news cycle, see when it's a bit cheaper than usual, and then take profits when it's a bit higher.
You're talking about ETFs. So what ETFs are particularly popular at the moment?
So in the last month, usually it's the kind of usual diversified ETFs that give access to Australia, the US and the globe, kind of in the top 5. Interestingly, in the last month, we've seen the top 4 are actually all related to ESG type ETFs, which we have seen on our platform quite a bit, where retail investors, particularly now, are very keen to put their money where their values are. And having these ETFs which can give you access to clean energy, climate change, innovation, and that sort of stuff, they're very popular and kind of seen as a way to make a difference in the world.
Yeah, and I mean, a lot of those sort of ETFs too would be very much long-term plays, because ESG is kind of a mega trend, I suppose, which will take 10, 20, 30, 50 years to play out.
Yeah, exactly. And with the change in government in Australia, I think that it's been flagged that there'll be more investment in kind of climate change mitigation and strategies in clean energy. So I think it's a smart move to say, I believe in a future that can be positively influenced by my investing behaviours.
Well, Sharesies itself, I find you're an interesting company because you really have hit the ground running here in Australia, and you are making a lot of noise. But the thing behind the purpose and profit idea of Sharesies is also something that's attractive to many investors, I'm sure, in terms of finding a platform to use. Tell me about what happened when you came here from New Zealand. New Zealand is a very inclusive society in many ways relative to Australia, particularly when it comes to First Nations people. Tell me what you found when you came here. I think this is an interesting story.
Yeah, it is. When we decided to launch here, like Sharesies as a B Corp, purpose and profit is very key to what we're doing. In fact, we look to purpose first, which is it's an awesome place to be in, and the reason why I joined the company. And when we kicked off in Australia, our goal was to provide financial empowerment for everyone. And so being in Australia, there is a disparity in the way that economic inclusion is for the First Nations people of Australia. So it was very important for us to engage with First Nations people. So we've started on an engagement strategy. We're looking at how we can help provide financial empowerment for everyone, and particularly what we need to do to help lessen that disparity between First Nations people and other people living in Australia.
That's not exactly an easy task, Brendan.
No, it's not. And it's not one that you can just decide what to do. So we're working with community on ways to talk about investing, making sure that we highlight awesome stories from First Nations investors that we have to get community talking about investing and a way to create a nest egg for generations. What we've done with Sharesies is people around the dinner table now are talking about their investing and how that's changing their life. And we think that intergenerational stuff is really our purpose. We're not about kind of just getting brokerage on buys and sells and getting people trading quickly. We're all about wealth development, and that's a generational thing.
Brendan, thank you for talking to Fear and Greed.
Thank you.
That was Brendan Doggett, Country Manager for Sharesies AU. This is the Fear and Greed Daily Interview. Remember, this information is general in nature and you should get professional advice before making any investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.